Hello again, everybody. Welcome to another installment of Between Two Earnings Calls with Mr. Investor Relations. I'm your host, 𝗕𝗿𝗏𝗂, and today we're on location in Dallas. I've been here most of the week for business meetings, so I'm filming this on a Wednesday versus Sunday. And if we're in Dallas, that can only mean one thing. We want to try to tie the Herschel Walker trade to investor relations. And when you think about it, 30 for 30 is a great creation and divine inspiration for some of us who love sports. And one of the best shorts is the Great Trade Robbery, which is where the Dallas Cowboys and Jimmy Johnson trade Herschel Walker for a bunch of draft picks, and it sets them up for a dynasty. And there's a few things that are good takeaways here, I think, for investor relations pros. And the first one is this idea that sometimes you have to do the unthinkable in order to put yourself on a path to correction. And in the Herschel Walker trade, it was trading your best player away and being 53 players away from the Super Bowl. When you're investor relations, sometimes that means I have to lower my numbers or reset financial expectations in order to put my company on an upward trajectory from a valuation perspective. Number two, there's this great quote of Jimmy Johnson where 𝗘𝗿𝗃𝗀𝗀𝘀 says to him, "We don't talk to Al Davis." And Jimmy Johnson goes, "Well, I do." And the point is, investor relations, if your company is struggling and you have a lot of short investors or negative investors, you have to be the first person to step into the breach and talk to those people who are short or negative, because you're the ones who are going to have to convince those investors to become more positive on your company. And then the third one is this idea where Jimmy Johnson talks about the draft picks, and that the key was, yes, that he got all of these draft picks to make the team recover, but the more important part was he had to pick the right players. And when you're in investor relations, it's not enough to just provide good financial guidance. You actually have to execute on that guidance that you're giving to Wall Street. If you don't execute on financial expectations management, your stock valuation is going to get destroyed. Thanks for watching.